Are you ready for April the 2nd? Tariff Day, Independence Day, all kind of days. Well, we need to talk about it right now in a video that will provide you the best value, facts to facts, all the way through, no messing around. Price, no indicator. Too many people are focused on that. All this is coming up in this video. No one cares on the value. Buffett is no bell. Let me explain. Do not copy his trades. You don't need it. He doesn't need it. Wait, patience, bullish, bearish, rubbish. All of this stuff is going to be covered in this live video, unedited as it happens. Get ready for April the 2nd. How to trade the tariffs. What Buffett thinks, what Europe thinks. These are all the facts. This is what I'm doing. 3 months now, down $17,700. Does it get much worse? Well, it absolutely can. But let's focus on what's important. We're going to cover all these points today, all of this on this video. Please leave me your comments and thoughts below, and I will answer all of my members' questions. So let's focus on what's important. Price is no indicator. Too many people are focused on price being the indicator to buy. All over YouTube, people talking about individual stocks. At this level you buy, at this level you sell, because it sells videos. It's also quite sensationalistic on all the main TV channels as well. Everyone likes to talk about the individual stocks and the buy zones, the sell zones, and all the rest of it. Now, these are important, but they're not what interests me. And they're certainly not what interests Warren Buffett. Price is no indicator. Price is merely the stock price on the day that people are prepared to pay for the stock due to uncertainty, volatility, and basically it's a voting machine, a weighing machine, no more, no less. Price is no indication. So why do so many people focus on price? Let's go back to the studio and let's talk on that first thing. And no one cares about the value. Here we go. So let's first of all talk about the price, no indicator. All over YouTube, you can see videos being made talking about specific stocks, telling you at this price you should buy here, at this price you to sell there. In fact, I never hear anyone mention the value. The actual value of the stock is not the price. The price is discovered by simply looking at the balance sheet, the margins, the profits, the customers, talking to the CEOs. That's what I do. So I've no interest whatsoever in the price action or what's going on to indicate whether it's a buy or not. It's not telling you anything. If you look at the price action, it tells you nothing and you make mistake after mistake after mistake. You are constantly chasing the stock up, chasing it down. And remember, this is most important. You're chasing a stock and the stock doesn't even know you exist. The stock doesn't care what you do. It doesn't care whether you buy it, sell it. So why do you put so much interest in what the stock price action is doing when you should be looking at the balance sheet? I did a poll and I asked my audience how many people actually read the balance sheet. 85% don't even read the balance sheet. That should scare you. And that's typical. That's quite normal. No one is focusing on the businesses. They're focusing on the stock trades and the price action. So there's the first mistake. Let's move now on to Warren Buffett. Warren Buffett is no bell. He is the bell. What do I actually mean by that? Well, people often use Warren Buffett to quote certain things, or they'll follow what Warren Buffett's doing, and he's not an indicator of what you should be doing, but he is the bell, but he's not the bell, the indicator for you to tell you when to buy and when to sell. You're looking at it you're looking at it wrong, and I'll explain why. $341 billion in cash. That's Berkshire Hathaway right now. So people are fearful. They think, well, the greatest trader in the world has all his money in cash. Well, he doesn't. Actually, it's 1/3 of the Berkshire market cap is in cash. Many people said, well, he sold the S&P 500. It was 0.01% of his overall position. along with SPY. It was irrelevant. So drop in the bucket. He was just tidying up his account. But 1/3 of cash in Berkshire Hathaway scares a few people, and I'll explain why that does and why he holds so much cash. Is it just because he's so bullish and he's about to buy a huge amount of stock? Not at all. And it confuses people. Let me explain why it confuses people and why 1/3 of the market cap is in cash. Not all of it, just 1/3, but it frightens people. Let me explain why. Warren Buffett holds so much cash in Berkshire Hathaway for the main reason, not to find the bottom of the market. He doesn't try to time the market. It's of no interest or consequence to him whatsoever, including myself. I'm not looking for a bottom. I'm looking for value. We'll come on to the value of what I've been buying in a moment. But the most important thing to consider is the reason why Warren Buffett holds so much cash is because he's an insurance company. They need to have liquidity. They need to have cash at all times. Warren Buffett has famously said he will always own more stocks than cash, but he does want cash on the sidelines. Now, why do I not believe cash is king? Well, first of all, I'm not an insurance company. I don't need cash on the side, and I'm growing my portfolio. Whereas Warren Buffett is spending his time focusing on not losing money and protecting his money. Think of it just for a moment. With the amount of money he's got on the sidelines, he doesn't need to buy. He can have patience, wait, because if he only earns 4% on billions of dollars, do the calculations yourself. Why would you risk your money? There's no need to risk your money when you're Warren Buffett, and you need cash anyway. The other thing is, and I explained that he doesn't need it, that is where sentiment is key for an investor. If you're Warren Buffett and you don't need to make any money, just earning 4% makes you millions and millions, if not billions of dollars a year without doing anything, that very definition of you don't need it is really, really important. Always buy when you don't need something. I'll explain what I mean. Or sell. A few years ago, when COVID came, everyone was scrambling around to get cars. I didn't need my car. I had access to a second car. My wife has a car. And what did I do? I sold my car. I sold my brand new car, which was 2 years old, for more than I paid for it because I didn't need it. And that's the very definition of buying and selling at the right time. If you always need something, you're always going to pay the price for that. You're never going to get a deal. Patience is the key here. So think about patience. Don't need it, and then you'll always trade and invest wisely. At this point in the video, I'd love to ask you to tap the like button if you'd like to support my channel, and consider subscribing. I go live 12 hours a day. I'm making this video unedited live for you, and I hope it provides some value for April the 2nd. Let's move on to our next point. As he gets bigger, and Warren Buffett does find this a problem now, it's much, much harder for him to beat the market. He doesn't need to beat the market either. You shouldn't copy his trades or even look to emulate what he does, because everything he does is completely different than you. Your structure is completely different. Your timeline is different. Your goals are different. And using Warren Buffett as a guide is always going to end badly. It's an entirely different strategy. Look through history. If you look through history as well, you can see the times when Warren Buffett made his biggest purchases is when the stock was undervalued, not when it was bearish or bullish. Focus on value. That's why I put here on this screen, bullish or bearish. Everyone talks about being bullish or bearish. Well, what you should really be focusing on is buying when it's the right price. Simple as that. The more money you get, the more you start taking your money more seriously, and you're not prepared to risk it or lose it. In fact, I've done 23 trades, 23 wins, and I'm more than happy earning 10% a year on the S&P. And in fact, I can more than double that by buying the macro dips. That's why I'm always focusing on when the S&P is undervalued. Currently, 19.7 times earnings is a very good value for the S&P. Not because it's down, not because it's bullish, not because it's bearish, not because of anyone says something on YouTube or whatever. No, what it comes down to is it's good value at 19.7 times earnings. Warren Buffett just like me, he buys on value, not on hype. If you're looking at YouTube and you're focusing on stock prices, bullish, bearish, buy the dips, going to the moon, all the rest of it, following all the trades, you're just following hype and you're making fundamental errors, and that will always end badly for you. One thing that I like with Warren Buffett specifically is when he buys back when it's value. Warren Buffett hasn't bought anything for ages. No emotion whatsoever. He's holding all that cash. He's not even buying Berkshire Hathaway. Why? Because Berkshire Hathaway is now overpriced because of you, the trader, not because of him. Now that's very, very different to CEOs. Let me explain the difference between a CEO of any other company and the CEO of Berkshire Hathaway. They're very, very different principles, and let me explain why. Warren Buffett, being the CEO of Berkshire Hathaway, focuses on buying back his own shares when they are good value. Whereas if you look at any other CEO, I can mention some particularly, but I won't because I have lots of friends who are CEOs, and I do get lots of information shared with me on my X and Instagram, and I don't want to rubbish anybody. But it is true to say lots of CEOs buy back their stock to simply promote the stock, make the stock look better than it really is by buying back. Warren Buffett never does that. Most CEOs actually buy back to manipulate the stock and drive it up. It's not necessarily the best thing for the investor. Driving a stock up when it's overpriced isn't a good idea. It just means traders will take their profit and run. People that buy Berkshire Hathaway know how Warren Buffett operates, and they tend to hold and very rarely sell their positions. Real money, long-term wealth is created by waiting, having patience to buy the best prices. Too many people are always looking to trade because they can trade. Remember, when you trade, the only consistent winner is your brokerage. We've just seen Robinhood bring out a new product where they are offering managed trading, managed investing. I should say managed investing rather than managed trading, really, but it will encourage extra trading. The purpose of this is they're making all these purchases on your behalf, so thereby increasing the volume of trading. Lots of different stocks being bought over a spread portfolio. It may, however, be a good thing for most investors who don't have the discipline to buy at the right time or whatever, or make mistakes. You've got the best people buying for you. But remember, the biggest winner will be the brokerage, because they are making money every single time they make a purchase. Every trade earns them some money. So patience is the most important thing here. So let's look at some of Warren Buffett's most famous trades. Back in 2020, and when the crash came, he went all in, he bought big. He wasn't dollar cost averaging in and edging in. He had conviction. He had discipline. He knew that the markets at that time were undervalued. But then he stopped again in 2024. He didn't carry on buying. Now, I carry on buying because it's very different for me, because I'm consistently buying over time. I try to amplify my buys using margin when we dip. But when my margin is being reduced, I can comfortably buy in the future on the way up. That's okay, because I'm a long-term investor. I'm not looking at selling, and I'm trying to grow my portfolio. Warren Buffett looks at it very, very differently. So just because Warren Buffett goes all in when it's all oversold and it's good value, and then stops buying, there's nothing wrong or right with that. But that's right for him. For me, I will go in and I will buy big when it's oversold and it's undervalued. But then once my margin starts coming down, I will start buying on the way up. But mainly, I don't buy on the way up either. But I will buy on the way up because I'm still trying to grow a bigger portfolio. Because whatever price I pay now is going to be up in a year, 2, 5, 10 years anyway. So it doesn't matter too much if you are buying on the way up. But remember, Warren Buffett, again, will trade and invest very differently to you. People often quote Buffett as a guide, and they will use his words to often make them feel good about their positions. In fact, they'll often use his quotes out of context. I'll give you an example. Bitcoiners do it all the time. Bitcoiners are always saying, buy when others are fearful. They use this phrase and this quote from Warren Buffett frequently. However, Warren Buffett, when he said that, was not referring to Bitcoin. So we need to remember that. People often use quotes like this to make them feel good about their trades. It's not actually in any context whatsoever. Let's talk about actions and not words. Very often when they say things like buy when others are fearful, a phrase that is used by Warren Buffett a lot, people don't. They will say they're going to buy when things go down, except they don't. They always think it's going to be worse and worse and worse. It's going to keep on going down. So I'm going to keep waiting and waiting and waiting. And they're constantly always sat on the sidelines. And facts show us, and history shows us, that most retail investors who do not study balance sheets, who do not really understand the fundamental values of their stocks, actually do the opposite. They buy on the way up, and they don't actually buy on the way down. Actions, not words. Very, very important. You have seen live on my show recently, I've been buying more and more and increasing the size of my trades and positions on the way down when it fell below, when the S&P fell below 19.7 times earnings. That was a good sign for me, a good value for me. Very often people will say they'll buy on the way down, but they don't. They get fearful and they think it's going to keep going down. They'll stand by, they'll wait, not because they are looking for a good value. They don't know what the true value is. When you know what the true value is, you go all in and you are okay with doing so, which is what I've been doing. Actions, not words. Most retail investors, because they don't understand the true value, will actually start buying on the way up. In fact, a lot of professional traders will do that as well. They'll see the momentum going up in the right direction and they'll join in. The real investors bought when everybody else was selling, not because of a bearish or bullish sentiment or fear or blood on the streets or any of these YouTube phrases. They did it because they understand the value of the asset is going to be worth more in the future than it is today. That's all investing is, buying something under value which will be worth more in the future. Finally, was the crash correction? Technically hasn't been a crash, it's only been a correction so far. Was it all done on purpose? Well, there's plenty of evidence to suggest that, and I actually think there's some weight in that argument. Let me tell you what I think. I think this correction was done on purpose. This instability of on-off tariffs and so on and so forth is to drive the market down, to pressure the Fed to lower rates. Now, why is that so important? Well, the 10-year Treasury. This is when the government borrows money at a lower rate to offset its debts. Right now, it's coming due and rates are really high. The government want the rates to go down quickly so they can refinance their debt. Would you want to pay 4% when you can be paying 2%? Imagine, it will save the government billions and billions of dollars. I think what's happening at the moment is Donald Trump's presidency is starting tough. It's starting with all the bad news. It's starting with the markets crashing. It's starting with volatility around the world, creating havoc left, right, and center, because the good news is coming. The good news will be tax cuts. That may offset some of these tariffs for Americans and the American economy. That could be a major catalyst going forward. That's why I've been buying. I've been buying because the markets are oversold. The value is there. The S&P 500, in my opinion, is the best way of buying and investing. I don't need to be an individual stock picker. I'm not looking at signs of bullish and bearish and going to the moon and going to zero and markets correcting, crashing. I'm not interested. I'm simply looking at value to buy an asset that will be worth more in the future than it is today. And with everything going on right now, I think that the rest of the year from June onwards is going to be very bullish indeed. Not overall from where we started at the beginning of the year. I said at the beginning of the year, it will only be a 10% from this year. And I stand by that. However, with a 13% drop on the S&P, and I've been buying a lot lower than it was at the beginning of the year, I've actually got extra 13% to add to the 10%. So that's 23% this year. And that's why I'm using my margin, because at 5.25% against 13, it's a no-brainer. Again, no emotions here. No sentiment. The stock doesn't care you own it. No one cares if you're bullish, bearish, or anywhere in between. I'm simply looking at assets that will be worth more in the future than they are. And my cost of borrowing, which is the cost of business, is under the profits I'm going to gain. So I'm happy to do it because I don't have piles of cash on the sidelines. I've only just started. I've only been doing the right thing actually for 14 months. The first couple of years I was investing and trading. I was making mistakes. I was learning my trade, and now I understand the markets. Now I have relationships with CEOs and hedge fund managers and people I talk to all the time, and I know what they're doing, what they're saying, and what they're not saying. I understand the economy. I've covered all the FOMC reports for the last 4 years. I've covered all the earnings for our major stocks that we cover on the show, and I've been live 12 hours a day. I must have picked up something. I have learned it's all about value. Buying something that is going to be worth more in the future than it is today. Focusing on numbers, facts, balance sheets. Going old school. It's got nothing to do with bullish, bearishness, sentiment, none of it. But if you see that the market is oversold and the market is being manipulated the way it is now, it's clearly a time to buy. Don't compare yourself to Warren Buffett. You're not Warren Buffett. And it doesn't matter if you think that's good or bad, you're just not. And what he does is not what's right for you. So I hope you've enjoyed this video. I hope you watched it all the way to the end. I hope you tap the like button and consider subscribing. That would be absolutely wonderful. I do have some videos that you're going to enjoy though. Some extra videos. Click above my head. I've got the philosophy of investing and several other videos about margin call. Very, very important margin call video when I actually got margin called live on the show and how I actually worked it to actually benefit my position. So go and check that out. That'll also be down below in the description of this video and pinned to the comments. The videos I think that will benefit you most will be pinned to the comments, the description, and above my head throughout this video. You've seen them. Over here, I shall also put them there as well for you. 2 things I think would benefit you most. Good luck for April the 2nd. It's all about investing and buying value. Simple as that. Don't have too much emotion. Understand what you own and you'll win. 23 trades, 23 wins, $1 million by the end of the decade. I've made that commitment and you'll see it happen. Until next time, as always, take care of yourselves and each other.